Back to phone calls. Here's Bob. He's in Calgary. Hi there, Bob.
Hi, thanks for taking my call.
You're welcome.
My question's on Pembina. And David, do you see stocks like Pembina, Keyera as possible takeout targets for Kinder Morgan, TransCanada, Enbridge?
So, Bob, we've said for a long time that we thought that there was possibility you could see consolidation because some of the midstreamers just have more growth opportunity and there's some great longevity in their projects. The only problem is, of course, they're not inexpensive. So they would be expensive acquisitions. Doesn't mean that they can't happen. You know, the big guys like Williams and like Kinder Morgan have very low cost of capital. And so that's the environment where you see acquisitions take place. We haven't bought them because we expect that, but I think over time it wouldn't be impossible to see additional consolidation in the industry.
And I guess whenever that happens, you might see a flurry of them if you see one.
Well, you know, we know that M&A is picking up and the market is applauding it. You know, many of the deals that we've seen recently, the acquirer's shares go to a premium almost immediately. So the market is applauding good use of capital, and they believe that there are strategic acquisitions that can be done that will be accretive to the shareholders going forward. So you're right. When one happens, there tends to be a flurry. You look at what's been going on in the pharmaceutical industry. You know, you look at what's going on in some other industries. I don't think that you should rule that out. I think that's a very real possibility. And that also tells you that if strategic buyers see an opportunity paying a premium to market, then public shareholders who don't have to pay a premium are getting a really good deal at current prices. So we think that M&A is a harbinger of good markets, and we think that it can go on for a while.
Next up is Marie, who is in Hamilton. Hi, Marie.
Hi, good afternoon, gentlemen. David, I want to thank you for the J&J referral. That worked out good. And my question today is on DuPont. You were talking about, you know, different sectors and diversifying, and I'm just wondering what you think of it and whether you would buy it at these levels.
Sure.
Thank you.
Sure. So, Marie, I think that we've gone from a market that was between 2000 and 2012, a market for price setters, okay? Producers of products that were in short supply, that were able to set prices, and price takers who had to pay those higher prices were under pressure. I think we have gone through a watershed over the last 2 years to a market where the price takers are doing much better because, for instance, the commodity producers are having a hard time setting price. So anybody who is buying commodities now is benefiting from the weakness in commodity prices. The chemicals industry has been a huge beneficiary of the boom in oil and gas production in the U.S. because natural gas is a big input cost for chemical companies, and their costs in the U.S. are way below the rest of the world. So we've been big investors in chemical companies, and it's interesting, you're seeing a renaissance in the chemicals industry in the U.S. Big plants being built. We talked about Sassoil building a $23 billion plant, or industrial city really, in Louisiana to produce more chemicals. So we like chemicals industry as a whole. It's a big beneficiary of this long-term theme of greater energy production in the U.S. DuPont is a great company. We don't own it. They're a great company in that they have been shedding sort of the commodity chemical businesses and focusing on specialty chemicals, which is higher margin. I think you do just fine there. We own Dow, we own Westlake, we own Lyondell, which I've used as a top pick here, LYB. I think they all look great. So I think the sector's in your favor. I think that the financials and the dynamics in the industry are in your favor. Prices are behaving very well. This is a leadership sector.
Okay, David, let's talk about something a little more speculative. Alex is in Burnaby, BC. Hi there, Alex.
Hi, thank you for taking my call.
You're welcome.
My question is on BlackBerry. Just wondering what David thinks about it and if he thinks it's a good buy right now. Thank you.
Right. So, Alex, we don't own BlackBerry currently. We do own Apple. You know, BlackBerry's gone through a significant change in their business. They're really trying to make money on their enterprise system. I think that there's a fair bit of risk in the business. We are not value buyers buying something for what we think the value might be if they get things turned around. So I'd prefer to look other places.
Okay, so a pass on BlackBerry. We will take a break here and come back with more of David and your questions.